Welcome back to Worldwide Exchange. U.S. existing home sales expected to drop more than previously thought last month, down 2.2%. The decline comes amid weak demand and ongoing concerns, of course, about the foreclosure process. Home sales are now on pace to close out 2010 at the lowest level in 13 years. Let's continue the conversation with John Tashjian, the principal I should say, at Centurion Real Estate Partners, a full-service real estate in commercial and residential. You do it all, right?
We try.
Okay. And I said your name right. Tashjian, like cashing in.
That's correct.
Well, can people continue to cash in? Has this market bottomed out?
I think the market has bottomed out. I like to say, but people drown at the bottom. And it's important to recognize that the bottom isn't a place you necessarily want to hang out with your investments. For the individual investor, you have a little bit of time to evaluate the market, and buyers in markets are taking their time. For the individual home buyer that's looking to purchase a unit, a necessity-based buyer, I think now is a great time. If you need to move, now is the time to buy. I think when you look back 2 or 3 years from now, you'll be pleased with your decision. I think as an investor, if you purchase today, 2 or 3 years from now, you'll be happy with your decision. You probably will look back and say, I probably had another few months to evaluate.
Okay, well, you said you do it all. You talked about residential. What about commercial real estate? We've long said and been told that commercial real estate is going to be the next leg down in this housing crisis. Where is that?
Commercial real estate, it's a slower burn. I mean, commercial real estate, office buildings, retail, they've got longer leases. They've got longer debt. A lot of the transactions that were completed in 2005, 2006, 2007 were done with 7-year and 10-year debt. And so those stories have yet to be played out. What we're all hoping for on the commercial real estate side is for rent growth to occur before debt comes due. If that doesn't happen, if employment growth doesn't occur, if rent growth doesn't occur, when that debt comes due, it'll be a difficult period of time. What we're seeing in the near term is banks that have loans are willing to work with their borrowers, effectively kind of kicking the can down the road.
I was just going to say that. Yeah. They are kicking the can down the road, and you were talking about the expiries. So this is a concern that we should continue to keep back
for years to come. For years to come. I mean, we're hoping for the best in the future. That's what we're looking for. But banks are willing to stick with sponsorship rather than take the real estate back in most cases.
Christine wants to jump in from Singapore.
Hey, John, this is Christine. You know, with the dollar looking very attractive these days, are you seeing a lot of foreign buying when it comes to commercial real estate?
On the commercial real estate side, on the residential side, foreign buyers have come into the market in droves in recent months. On the Manhattan condominium side, for instance, we're seeing strong interest from Chinese investors, from Korean investors, from Brazilian investors. They have the benefit of an inexpensive dollar and inexpensive real estate compared with over the last 10 years, and so it's a double bonus for them. And they're here and they're active.
And how do you balance that with this shadow inventory problem that we've long seen?
Well, shadow inventory is a huge problem, and we can talk about it in the sense of residential real estate. Until that clears the market, you're not going to see any real growth in value, and it's important for absorption. On the commercial real estate side, on the office side, shadow inventory is the sublease market. The first sign of any improvement in an office market is really for that shadow inventory or that sublease market to disappear or become absorbed. Once that gets absorbed, the market has an opportunity for growth. But again, you're not going to see rent growth until you see job growth. Companies don't lease space because they think they need more space. They lease space because they've got too many people and they need to put people in seats.
It's all interconnected, and
it's
you don't want to
it's
hang
all
out
connected.
at the bottom.
Absolutely.
So says John Tashjian, principal at Centurion Real Estate Partners. We appreciate your time.
Thanks very much.
Thanks so much,
Good to see you.
Ross.
Yeah.